Hey everyone, this is Casey Stubbs. Today we're having a new episode of How to Trade It podcast, and I'm excited to be with Matt Paulson, the founder of MarketBeat.com. Hey Matt, how are you?
Doing good. Thank you, Casey. Happy to be on the podcast today.
Awesome. I'm so glad that you're here, and I can see the heater behind you. So you having a little bit of a chilly day?
Yeah, so our office is in Sioux Falls, South Dakota. Obviously, the middle of winter here, and our office is in an old brick building. So it does not always stay as warm as it should. So got the space heater going today.
Yeah. I've driven through there a couple times because I drive from Pennsylvania to the state of Oregon every summer with my family. We do a cross-country family vacation, and sometimes we drive through there. A nice area.
Yeah, I like living here. There's a lot of good stuff about it.
Yeah. So just to give the audience a little intro about you, you're the founder of MarketBeat.com. A lot of people probably listening already know what that is because it is a massive website. How long have you been running that site, and when did you start it?
Yeah, so MarketBeat's really kind of an iteration of a couple of different businesses. So 2006, kind of started a personal finance blog. 2009, I thought, okay, I should start a second one of these. And I started a little website called American Banking and Market News. Got it into Google News, so it was getting some pretty good traffic. And then we had the name Analyst Ratings Network for a little while. And then in 2015, we got the MarketBeat name and have had that name ever since. So started out personal finance blog, became an investing blog, and now it's a giant investing website with stuff.
So when it was personal finance blog, were you just writing yourself, and you were writing personal finance tips for the everyday person that was interested?
100%. That was there were a lot of personal finance blogs back in 2006. That was the thing to do. You could make money by having like a link to Mint.com's affiliate program and like Google AdSense, and you could sell like links on your website, and you could make a few grand a month doing it. And it was fun, but eventually I wanted to become a real business, and I didn't think that was going to be the route to make that happen.
So what did you do before that?
Web design.
Okay, so that you were able to merge the web design into this business, since you already knew everything on the website.
Mm-hmm. Yeah, so I really the strategy over the last kind of 10 years has been saying, okay, what's out there now? Where do these tools fall short? And then how can we make better tools that are one, easier to use, but two, also backed by better data? Because as I got into it, I found like a lot of the, you want to like see an earnings calendar. So you go to Google, you type in earnings calendar, you hit Estimize or any of those sites. And what we found, like we analyzed the data on all of them, and we find that a lot of them tend not to be, or at least back in the day, like the data was very inconsistent, and like sometimes data on different sites like didn't agree with each other. So we spent a lot of time like saying, okay, we want to cover like analyst recommendations, like where can we like get all of that data, and then how can we normalize it so that we really have all of the ratings in any given day, but to also have an understanding like that the data we actually have is accurate, because you might see like a rating on one site be listed as an upgrade, but another site like they might call it a downgrade, and like, okay, what's the truth here? So we built some cool tech probably about 10 years ago to kind of analyze financial data and just ensure the accuracy of it.
So you guys put out the earnings calendars for people that are doing stock research and they want to know when earnings are coming out, so they can kind of follow along what's happening with companies and make good investment decisions. And so that's a great tool for investors to use. Mm-hmm. And so how hard was it to get all of those? Let's just talk about the earnings calendar one. How hard was it to get that set up and to get it working properly, to build out the tech, to get the data, to do all the programming and everything for that?
Now it's really easy because you can just buy the data online and it's pretty accurate. Back then, not so much. So initially what we would do is kind of estimate the earnings dates based off like historical earnings dates and say, okay, this company usually announces earnings like the second Tuesday of the earnings cycle after earnings. So like, we would forecast an earnings date, and then like once they announce it, we'd go and like update it and make sure it's accurate. then like say now it's confirmed. Here's the here's the link to the webinar. And it's gotten so much easier over the years because you can buy that data reliably now from any number of different places.
Yeah, that's great that the data is available now to help people make good decisions. And there can be the problem now, I think, is there's just too many choices out there. There's so much competition. What are you guys doing at MarketBeat to really add value to investors and kind of set your guys apart from the rest?
Yeah, so I think the name of the game now is, everybody's got kind of this access to the same data, so the data is not necessarily like a competitive advantage into what it used to be. My opinion is, we want to create tools that analyze the data, but also kind of provide commentary around it. So, and also we're looking for new types of data. So we are one of the few sites that have some really good ESG data on companies. So for investors that want to see the environmental and social impact of stocks, but most of us know ESG data is, I don't say kind of BS, but it's kind of BS. So we partnered with a company called Upright that would look at companies from an environmental, but kind of a community good aspect, kind of rate companies on different categories. And we're looking for stuff like that where it's not something that every site has and can really provide some unique value to our subscribers that other sites can't.
I see. Yeah. That's definitely, I can see where that will add value. So, I was just thinking about when you first got started. What was the reason why you decided to start with the personal finance?
Yeah, it was really interest at the time. When I started, I was at the tail end of college, didn't have any money, and I am effing this up. I got to figure out how to handle my money better. I need to make more money. I need to manage it better. So I just kind of wrote about my journey, as a lot of people did back then, and graduated from college debt free. Bought a house in 2009, paid it off within a year. Did some stuff that a lot of people can't do, and a lot of it was because I had the blog that was making me money on top of my day job.
So how long did it take you for the site to actually start generating revenue?
So started it in 2006, made basically no money. I think I made $17,000 in 2007. And then in 2008, I think it went up to 50. 2009 was about 50. And then 2010, 100. And, now we're at 25 million top line revenue. So it's gotten to be a big kind of brand.
Yeah, that's awesome. Congratulations on that growth. That's fantastic. So in the early days, what was your primary source of revenue from the site?
It's always been kind of advertising. The types of advertising that advertisers we work with has changed over time. It used to all be kind of like Google AdSense and advertising networks, and these days it's so many more direct relationships with people who are really trying to reach an audience of retail investors. So kind of the three kind of different groups of advertisers we have. One are kind of the fintech platforms that are looking to build their audience. Number two is public companies looking to get investors to pay attention to them and say, hey, come learn about my stock, learn what we do. And then the third is kind of financial newsletter publishers that I'm sure many of our readers are familiar with.
Yeah, when I first started my site, it was in 2009, and it was kind of similar. I was writing about currency trading, and I was in construction, but I lost my job, and so I was laid off, and I didn't really know what to do, but I was into computers, and I was into trading and finance, so I thought, I'll just write about it. And I think because it was 2008, the market was on the tail end of 2008. We had a pretty big recession, and that's why I lost my job in the first place. But people just started coming to the site. I got picked up by a couple news outlets, and the traffic just really jumped in, and I didn't even know how to monetize it at all. I was like, what is going on? Yeah,
that was kind of a magical time. I remember in 2009, we could write, everyone was worried that Citibank and Bank of America and Wells Fargo were all going to go bankrupt, right? So we would write about Citibank every day because I knew clockwork, we could write an article, it would get picked up in Google Finance, and there was 10,000 page views just waiting to happen. So, we had a lot of fun back then.
So with all of this advancement in business, advancement for you, personal growth, you've learned how to grow a business, learned how to manage a website, and through your educating people and teaching them with news, giving them tools, you've got a great subscription service. But what have you personally learned along the way about trading and investing?
Yeah, I think the thing that I've kind of picked up is it is such a long-term game. And what I feel like many people pay too, especially in our space, we're too active. We pay too close attention to our investments. We trade too often. We move in and out of positions too often. Don't stick to a strategy. And that's like the ultimate deal killer. So the thing that I found works awesome for me is to find ways to invest that are it's a good decision moving in, and then you can just lock up your money for a long time. And for me, that tends to be real estate deals. I haven't figured out how to do it with the stock market yet. Honestly, if I, bought an index fund, honestly, I don't think I could get myself to hold on to it for 10 years because I would get distracted by something else or think something's a bigger, better deal. So I try to find things that are liquid that I can lock my money up into so I won't mess with it. And that way I can really have that long-term approach.
And so what does it take to kind of get your mind set around short-term to focusing on long-term? Because it seems like people, when they want money, they want it now. Mm-hmm. That's why in the education space, trading is so hot and is always hot, because they want to turn that dollar around really fast.
Yeah. And it does seem like whatever the hot thing is what people want to invest in, but they don't always realize it's hot because it already went up. It's not necessarily going to keep going up. So you gotta, I think really the play is to find, the down and out stuff. And, tech stocks have had a 40-50% correction in the last year. Maybe it's time to start picking those up again and wait till the market realizes they've oversold some of those positions.
Yeah, well, I don't know if you're into doing this or not, but a lot of the big tech stocks, I have been very aggressive, even during this down phase, of just continuing to kind of pile in. And so for me, if we do get a turnaround, it's going to be very profitable, because I've been really just, if it goes down, I'm buying more. Okay, goes down, I'm buying more. Goes down, and I've just been adding. And right now, when I look at it, this is the long-term thing. When I look at my account, it's really ugly. But it's not going to take much of a jump for me to get some really nice gains afterwards.
Yeah. Well, even if you look at Tesla, you couldn't buy Tesla stock at 120 since mid 2020. So it's the cheapest price you could buy the stock in 3 years. Well, maybe that's compelling, and I think that's that's true for a lot of tech stocks. So it's if you believe in the category, and I do, generally speaking, because the big tech companies are going to be where most of the innovation happens, and if it doesn't happen there, they're going to acquire the companies that are being innovative because they've got the money to do so. And but they're also kind of making a shift. You've seen layoffs at a lot of the big tech companies, and they're really focused on profitability. And ultimately, I think that'll be good for people that invest in their stock, because I think within a few years it wouldn't be unreasonable to see Google to start issuing a dividend, for Apple to ramp up its dividend, and some other tech companies to say, okay, investors really want to see profitability and some income from these stocks. And I think that's the direction the big tech companies are going to have to head.
Yeah, I agree, and I think that this is from personal experience, and you can tell me if you've gone through this. Me, as a person who's managing a company, I go through those same types of cycles as a business owner, right? I get really aggressive and things are going great, and then I overextend myself and I make a couple mistakes, and then next thing I know, I have to start cutting back, right? And so I'm oh no, all those profits are disappearing. I'm cutting. And then I do that for a while, and it's kind of like pruning a tree, right? You prune the tree, the gardener prunes the tree. It's a painful process. It doesn't feel good. But then when the tree heals and it grows back stronger, it grows back faster. And so every time I make cuts in my business, it's always a very good thing.
Yeah, I think that's what we're seeing now. I mean, we all know like big tech companies spend a lot in R&D and stuff that's mostly like never going to come to pass. Like, we're not going to have meetings where we're disembodied heads in a virtual environment. Like, nobody gives a crap to do that. We're going to be on Zoom, right? So for Facebook to really make some of those cuts and the other tech companies to cut some of the stuff that's like 99% chance not going to turn into anything, I think that's probably good for everyone because, one, it'll cut back on their unproductive expenses, but two, it'll also kind of free up tech workers to do something more productive for the country.
So what do you see as being some possible big investment trends over the next couple of years? Anything that you're really excited about that you want to invest in that you think people should really take a look at researching and learning about?
Yeah. It sounds boring, but right now I think, fixed income is really as exciting as it's been in the last 20 years. I've locked in some 5% CDs and 5% agency bonds where it's, you're going to get the money no matter, almost no matter what. And, fixed income has kind of gone back to what it was in 2004, and we just haven't seen 5% CDs and fixed rate stuff in a long time. So I think if you're sitting on cash, maybe in a bank somewhere that's, decided they weren't going to raise your rates for whatever reason, I'd take a hard look at that. It's more on a saving side than investing side, but now is a great time for people that have cash to put it somewhere more productive, and whether it's short-term treasuries or CDs or agency bonds, put your money where you're going to get the 4 or 5% versus the 0.1% the local bank's giving you. On the stock market side, it's a really good question. I do think tech companies are undervalued right now. I think energy companies are probably overvalued in the short term. I think there's going to be some really interesting stuff in terms of biotherapeutics. I think what the healthcare environment, medicine landscape looks like 20 years from now is just going to be wildly different in terms of just the crazy personalized medicine they can do and genetic editing. Like, my daughter's got a genetic condition, and once they kind of work through that with CRISPR, they will be able to cure her illness just by making changes to her genetic code. Not quite there yet, but I think we will be pretty soon. So companies that are working on that kind of stuff, to me, are still very interesting.
Yeah, no, that's pretty amazing and revolutionary stuff. And what about have you been following the AI stuff at all? Do you think that's a good investment? And are you doing any of that with your company? And I'm talking the big thing now, everybody's talking about ChatGPT, things like that. Are you guys using any of that type of stuff with your company? You think there's any investment opportunities there?
Yeah, there's kind of the two different things there. One, from an investing perspective, for public companies, I don't think there's really an opportunity to invest in that today and get to latch onto that trend because Google's doing some of that stuff, so maybe that's the way to do it with DeepMind. Chat or OpenAI is going to make a deal with Microsoft for ChatGPT. But I think that it's almost more of a defensive play in terms of between Microsoft and Google, who can be on top and stay on top versus something that's going to unlock massive new productivity. Because the reality is the content that ChatGPT is going to replace is kind of the cheap crap you can buy in Text Broker for 10 cents a word. It's going to be super useful, but maybe not in a way that dramatically changes the economy, at least not for a while. So I don't think there's a huge investment opportunity there for MarketBeat. We've actually been doing automated financial content since 2010. So when a company announces their quarterly earnings, we publish a news release on them. You can kind of see what it looks like at marketbeat.com/instant alerts. But we will generate articles based off data and publish them kind of in real time as kind of events in the market happen. So maybe there's an SEC Form 4, Elon Musk sells stock or whoever sells stock, we'll make a release on that within seconds and publish it out if we meet certain criteria that we think is interesting. So we've been doing it a long time. AP has kind of done the same thing since 2013 with their earnings announcements. We've had a few people try to copy that tech over the years. Nobody had great success, but it still worked out really well for us. Those other articles we do get 20, 30, 40,000 hits a day, depending on the day, and it's kind of part of our marketing strategy and will continue to be for a long time.
Yeah. that's really interesting that you've been using it since 2010. How does that work? How did you develop it? Is it some software you're using, or is it something you guys created in-house?
Yeah, we built it in-house. It's not super tech, not super complicated. The way it works is that we suck in data, and then when a piece of data that matches criteria that we specify, so a company raises their dividend, we'll publish an article about that and saying, and it's really simple. Like, Microsoft raised their dividend. It was this per share. Now it's this per share. Here's the payout ratio, and just kind of all the information the dividend investor would want. We'll publish that, or it'll get picked up by some of the news services and get some good website traffic from that. But it's all code we wrote. It looks complicated, but it's good programmer, like they could see what we're doing and replicate it, without a ton of difficulty.
So what do you think about as far as investing in Bitcoin? Do you think that that's going to be another big mover, or do you think that the big moves for that one is pretty much done?
Well, my thought on Bitcoin is if you've been following it a long time, like I have, I was mining Bitcoin in 2013 in my basement. I got pictures. It seems to follow kind of a 4-year cycle, or at least it has. Bitcoin launched in 2009. There was a peak in 2013. Then it crashed, and then it peaked again in 2017, and then it crashed, and then it peaked again in 2021, and now it's crashed. So it's the trends are I don't know if we're at a pattern yet, but it does kind of seem like that. I think we're going to hit 50K in Bitcoin again at some point in the future. Yeah, but is it going to be this year? Probably not. But there's crypto excitement seems to come in waves. There's you have a wave of enthusiasm, it becomes over enthusiasm, and then your hairdresser's putting money in Bitcoin. You're like, all right, this thing's going to crash again, and then it crashes, and then everyone's like, F it, I lost a whole bunch of money in crypto. Then they get out. And then, there'll be some new trend, last one was NFTs, and those have crashed, obviously. Before that, it was DeFi. Before that, it was kind of all these altcoins. So whenever there's, another trend like that, that's starting to pick up steam, that's kind of when the prices are going to kind of go up again until, there's the over-enthusiasm, and then the market gets way ahead of itself, and, people are talking, NFTs are the future of ownership. And, maybe they're just JPEGs of monkeys on the internet. And that correction has happened, and now we're kind of back at the bottom. So in terms of the 10 years or 15 years, 14 years of historic data we have in Bitcoin, it seems like it could be a decent time. If you believe in the technology and believe it's the future of money, I think out of any time in the last few years, it'd be the time to start thinking about, okay, it's not 50K, it's 10K or whatever it is, and maybe it's time to put some money in.
Yeah, I think that that's really been interesting to see. And so right now, if we peaked in 21, we're kind of in the middle of the cycle here, if it's a 4-year cycle. So we could be going down or sideways for another 2 years or so. And then, or at least before it starts the ascent could be starting. Do you have any feelings of what the next wave of excitement could be? Because you said DeFi, altcoins, NFTs, anything that you're picking up, new stuff that's of interest at all?
I don't follow it super closely. I do think there, out of what's kind of left in the NFT space, the thing that seems to have stuck are kind of the communities that, are kind of led by somebody who's got some notoriety. But then they have kind of an ecosystem of NFTs. So if you look at what Kevin Rose is doing with the Proof Collective, they've got the main Proof Collective, but then they've got the Moonbirds, and then they have all these different art projects, and they kind of feed into the same ecosystem. You could say Yuma Labs is doing the same thing with Bored Ape Yacht Club and Mutant Ape Yacht Club. I think that one's probably mostly hype, and I'm not super bullish on that project these days. And then you got what Gary Vee's doing with VeeFriends. Maybe that could take off, and it could become kind of a a brand, any of the Disney brands, maybe that could become a Star Wars or a Mickey Mouse or something where the VeeFriends are all these characters, and maybe you could own one of the characters, and I think some of those things could have some legs that will come back around and be super useful in the future, but it's most of the trends you can't really see them coming because we just don't know what's going to pick up steam.
Is there a way that you, you being a major media aggregator of information, you have access to a ton of data. Is there any way that you've seen a way to identify trends early on so that you can take advantage of those? Like, we might not know what the next crypto trend is, but how do we identify it early enough to actually profit from it?
Yeah, our site's kind of a reflection of like what retail investors are searching for. So it's the trends kind of get to us after they're already trends. Like everyone, the hot stock everyone's talking about today is like mobile and automotive. It's like an EV startup. No idea if it's gonna, do awesome or not, but it's already gone up like 200% in the last 6 or 12 months. So it's, yeah, I mean, we see the trends as they happen, but I don't know if we have the data to show like the trends as they're coming. The one really interesting thing though is like since January 1st of 2023, like there has been like a substantial just uptick in retail investor interest. Like our website traffic is up 30% month over month, and people are clicking on ads, they're signing up for emails in just ways they hadn't in the second half of 2022. So maybe that's a sign that the retail market's starting to turn around a little bit, and hopefully that's the case.
Yeah. So, like when the big meme stocks happened with GameStop, is that an example of like, by the time you hear about that, it's already too late type of thing?
Yeah, I think so. If you were on, the the Wall Street Bet subreddit, like maybe you could have got in early on that, but I think by the time most people hear about it, it's kind of too late, and like that's when you start looking, okay, GameStop is obviously not worth this, and yes, all the other short sellers have been pushed out, but I'm guessing somebody made money shorting it like after it had hit up, to whatever price it hit.
Right, and that kind of goes back to the thing that you said earlier about focusing on long term, right? If you're focusing on long term, you don't necessarily have to catch the investments right at the very beginning. You can, just ride it out as long as it's continuing to move, as long as it's a solid, strong investment, picking good companies, things like that.
Mm-hmm.
So with what's been a secret of your success at MarketBeat? Because I've been watching your website grow for a long time, from pretty much when it first started. I can't remember the first time I saw it, maybe 2016 or 17, but I've seen just a tremendous amount of growth and revenue growth, traffic growth, usefulness growth as far as adding additional tools and content. What's been the biggest secret for your success there?
I think we're among the best at a couple of things. One, we're pretty good at search engine optimization. So you search for a lot of things that investors would look for in terms of, like dividend calculator, stock calculator, like analyst ratings, different lists that we have, like insider transactions. Like we rank for all of those, and so we get a lot of people that are going to Google looking for tools. They come to our website, we have pretty good tools, and then they stick around. Second thing we're really good at is email marketing. I actually wrote a book on the subject a while back, in terms of like identifying, when somebody signs up for your newsletter, that's one thing, but how do you know which of those people are actually going to buy something, which are not, which are engaging, which are not, and what are their interests, and then sending them emails targeted to their interests, and really kind of personalizing the types of mail that people get to maximize revenue. And like we've gotten really good at that. I think we're probably among the best in the industry at kind of marketing technology for the finance space, and we built out some really cool tech on our back end to understand what people are interested in and what they're not.
Yeah, so just to kind of summarize that, knowing what people want and making it available to them so that it's easy for them to find, is that kind of a big thing for you?
Yeah, like even on market, like on the website, we have a big search box on the top of the website. So we will look at like what data people are typing in or what companies people are typing in, and then that's kind of how we identify some of the trends. Like, oh, we should probably have our writers write about these companies that are trending. So we've got a big report that shows like the trending companies, and then the writers will write about those companies that just jump up on the rankings.
So Matt, is there anything else that the listeners, that you want the listeners to know about things that you're working on, or that ways they can connect with you or find out what you're doing?
Yeah. So obviously go check out MarketBeat if you've never been there. You can use most of the site for free. We do have some premium stuff, but you absolutely don't have to pay for it. So check that out if you haven't seen it. I'm pretty active on Twitter, so if you want to follow me there, it's at Matt Paulson SD, so MattPaulson SD for South Dakota. Feel free to follow me there. I'd love to connect with your audience there.
Okay. All right. Well, we'll have those links in the description. And, for everyone that's listening, if you haven't heard of MarketBeat, you probably have, because it's one of the biggest financial websites around. You should really check it out. Sign up for some of their newsletters. Get access to their reports. They got earnings calendars, great tools for investors. I go there all the time looking for data and research. Very helpful for stock research and finding out what's going on. So I recommend you check that out. We'll also link to Matt's Twitter account. As you said that, Matt, I didn't realize you were on Twitter, so I am following you right now because I'm pretty active on there as well. So follow Matt on Twitter. Follow me on Twitter. I'm on Twitter too, Casey Stubbs. And we'll have all those links in the description. But Matt, I really thank you for taking the time to share with my audience today and to talk with me about your company and about investing.
Hey, great to chat with you, Casey.
Thank you. All right. Well, that's it for today's episode of the How to Trade It podcast. We will see everyone or hear everyone on the next episode. See you soon.